Pessoal, sejam muito bem-vindos a mais um episódio do Random Walk Podcast. Estamos aqui mais uma vez com um convidado super especial. A gente vai ter uma surpresa durante esse episódio, mas eu vou contar nos próximos minutos. Mas antes de mais nada, sem mais delongas, deixem o seu like, se inscrevam no nosso canal do YouTube também. O like de vocês é super importante, dá uma super força pra gente continuar fazendo esse projeto e trazer as melhores mentes do mercado ou até mesmo de fora dele para bater esse papo gostoso aqui com a gente. Pessoal, o convidado de hoje é um convidado super especial porque, diferente dos outros convidados, é o primeiro gringo que eu vou entrevistar aqui no podcast com vocês. Ele mora no Brasil há mais de 28 anos já, né? Fala português, mas como ele mesmo disse, apesar de morar todo esse tempo no Brasil e falar português, ele nunca vai ser brasileiro. Então hoje a gente está aqui com o David Wolf. David, primeiro, obrigado por estar aqui, obrigado por ter aceito o convite. E é uma honra estar falando com você.
Bom, eu acho exagerado falar que é uma honra, mas um prazer estar aqui. Vamos tentar conversar um pouco do mundo atual, do mercado atual, um pouco de como que eu vejo as coisas como americano, morando no Brasil há muito tempo, talvez trazendo um pouco do que está acontecendo no meu país para a audiência, e vai ser bem interessante. Eu agradeço muito a oportunidade.
Imagina, eu que agradeço a sua presença aqui. E como eu falei para vocês, pessoal, que vai ter uma surpresa, a gente pensou antes de fazer esse episódio e toda a entrevista vai ser falada em inglês. Então esse vai ser o primeiro episódio também que a gente vai fazer em inglês. Vai ser bastante legal, afinal é a língua do mercado, é a língua mãe, não só do mercado, mas de N outras áreas profissionais, como por exemplo, eu também sou apaixonado por aviação, a língua mãe da aviação também é o inglês, e por isso a gente decidiu topar esse desafio. E, de novo, espero que vocês aproveitem. So, David...
A última coisa em português, o desafio é seu.
O desafio na verdade o desafio é meu.
E Thiago, por favor, se eu começo a falar rápido demais, me fala, eu vou tentar falar de uma maneira mais acessível possível.
Perfeito.
Mas let's go.
Perfect, let's go. So, from now on, guys, it's in English. So, David, once more, thank you for being here. And I always like to start the show asking, well, who are you? Who's David? What David already did in your life? Why you are here in Brazil? Actually, now you are an American, so why are you here? Why you decided to come to Brazil? And your whole story.
Okay, no, it can try to be concise. As you said, I'm American. I was born in Washington, D.C. I studied philosophy at Williams College, it's a college in Massachusetts. When I graduated, I realized I could do nothing, or I could do anything. Sometimes the winds of life make you land in a certain place, and I ended up going to New York City. I knew nothing about the financial markets. I had a little bit of business experience, and I'll tell the story.
Okay.
My father was a lawyer at the Inter-American Development Bank. And so he had business in the project finances here in Brazil in the 60s and the 70s. And my family, my sister, my mother, we would come to Brazil to visit. And I fell in love with Brazil for many reasons. One of the reasons, probably the first reason, was the gemstones in Brazil.
Okay.
The semi-precious stones. To make a long story short, when I was 14 or 15, I found importers of Brazilian gemstones, and I got a license to work as a street vendor, as a camelô, in Washington, D.C., and my company was named Brazilian Imports.
Brazilian Imports.
So I had no idea I'd be coming to Brazil many years later. So that was one thing. So now, what does that have to do?
When was that?
Well,
more or less.
Well, I graduated from college from high school, in 1981.
Okay.
So this is in the late 70s.
Late 70s.
Right. And I actually was 16 years old, and I went actually to City Hall and got a little license, right, for a company that didn't exist. It was officially, but things were a lot easier back then. They were a lot easier. And so that story is important, not only because it has this strange connection with what happened to me later, coming to Brazil and making my life here in Brazil, but it's what got me the job on Wall Street. Basically, people told me, David, why don't you try to get a job on Wall Street? And I didn't want to work on Wall Street. Why? At college, the recruiters would come from the companies, from your big Bear Stearns,
Big banks.
Salomon Brothers, Goldman Sachs, Citibank, etc. They would come to your university and they would want to hire you for 2 years to do corporate finance. And you told me a little bit about your history, that you started off
I did that
in corporate finance. And so they would work you 18 hours a day, and then you'd lose your job in 2 years so you could go to business school. And I said, that's not for me. I don't want to do that. But then they said, hey, there's this thing called sales and trading. Like, sales and trading, what's that? It's like sports. I'm like, okay, that's not. I played soccer in college. Okay, let's go try this sales and trading. So I knocked on many, many doors. And when I finally got in for interviews, and I interviewed at many different places, they said, well, why do you think you should work here? I said, well, I'm a good businessman. Well, what business experience do you have? I said, well, I imported gemstones from Brazil and sold them on the street. And I had, this is true, I had 5 fellow classmates from high school working at different corners. Right. So anyway, that's how I started in the business. Somebody at Paine Webber, which was an investment bank, which later bought by UBS.
Paine Webber, if I'm sorry to interrupt, okay, but if I'm not wrong, Paine Webber wasn't the brokerage firm where Jesse Livermore first traded the
I was
stocks.
Shocked. When I was at Paine Webber, I didn't know that, and I was reading that book for the first time. Everybody's read that book. I don't know, a year ago. You're absolutely right. What a great memory.
Yeah, the Reminiscences of a Stock Operator,
yes,
right?
Yep, that's right. And I was shocked when I saw that, and I was very proud of myself. Unfortunately, Paine Webber doesn't exist anymore because all the mergers, etc., and it was eventually bought by UBS. But I worked at Paine Webber. Basically, they said, okay, come on.
And you stayed there until the merger? You stayed at Paine Webber?
No, I left a little bit earlier. No, not until the merger. Basically, we're now in I got out of college in '85. I knocked on all these doors, told my story. The fixed income director at Paine Webber hired me. I didn't even know what my salary was going to be.
Okay.
Done. I didn't know what my salary was going to be. I'll tell one more story. Sorry.
Please.
So, no, it was. I mean, it's kind of nostalgic because this doesn't happen anymore. After going through 12 interviews, 2 different days, 6 traders one day, 6 traders another day, the big guy called me back, and I was sitting in his corner office. And he left. He was just really... Anyway, this guy smoking a cigar and stuff, he left. And so anyway, left me there like 45 minutes. And then when he came back in, he goes, well, you've had enough time to think about something to say to me. And I said, well, I don't understand. He goes, well, what do you want to say to me? Why should I hire you? I said, well, obviously, the 12 people thought it was okay. Otherwise, you wouldn't have invited me back here. So I don't think you have anything to lose hiring me. I'm not going to cost you very much. He says, okay, you can start on Monday. Thank you very much. So I went home with a V-Dulce, with a virus. I collapsed for 3 days. I called the human resource guy, and I said, hey, the big boss didn't tell me what my salary would be. And he goes,
and I just said yes.
It's going to be, I just said yes. And he goes, so let me check. It's going to be $17,000. And in my calculations, I needed $14,000 to live back then.
Okay.
Fantastic. So then a couple days later, I went back to actually do the
math?
bureaucracy. No, the bureaucracy.
The bureaucracy?
The first day, right? And I come down, do the bureaucracy, and the guy, his name was Dan something, the human resource guy, said, oh, I talked to the big guy. His name was Raphael. I talked to Raphael, and I told him you were making $17,000, but he said it was too low. You're making $23,000. So I got a raise before doing one
job, nothing,
absolutely nothing. And so that's the type of thing. The world is unfortunately a much more competitive place today. I admire what a challenge it is for people today, for your age and even younger. But things were a little bit easier back then. Anyway, I stayed at Paine Webber for 10 years.
10 years.
4 years. They put me on the mortgage-backed trading desk, which obviously mortgage is what grew and grew and grew until 2007, 2008.
Mm-hmm.
And then after 4 years, they asked me to go to Tokyo. And so I lived in Tokyo for 4 more years. I was a market maker for U.S. Treasuries and mortgages to Japanese clients, to Korean clients, to Singapore clients, trading the whole night zone. And so that was between 89 and 93.
So this is after the 1987 crash.
Yeah, the 1987 crash. I started in '86. Was in my first year. Within my first year.
Okay.
So I mean, I could tell. Let me tell you a little bit of the stories of Tokyo, because I mean, if you think about that time period, we had the first Gulf War.
Ah, okay.
And the first Gulf War happened in what time zone?
In Tokyo time zone.
Basically, yeah, right? When everybody was sleeping. And it was the birth of CNN. That's because CNN, as the news vehicle where you could actually see live what was happening, you could watch the war. Right? And the bombs would land and the market would move. You'd be watching, and that was the first time that it was, they said that it made it very accessible for you to see in real time what was moving the markets. Oil was moving, and
that's amazing, because before CNN, everybody was like in a blackout.
Comparatively, yeah.
They wouldn't have the vision of what's happening in the other time zones or
exactly right,
or other markets and so on and so forth. Wow.
So that was pretty fun.
And when you were in Tokyo, where did you work back there?
That was old Payne Weber.
Old Payne Weber. Okay.
So basically, they said I was a young guy. I wasn't married. They,
you can go to Tokyo without.
You can go to Tokyo. You don't have, you don't have a family. It's going to be cheaper for us.
You are not a attached guy.
Right. And I said, okay, let's go. And then I did the same thing in London for 2 more years. So
after Tokyo?
Right. So basically I was in charge of fixed income, U.S. fixed income in the other time zones for the other clients. And I was a market maker, right? How do you buy 50 million 5-year notes, right? The market's 96, 2 bid, I'll pay you 2 plus. Whatever, and then we'd have the green screens there, right? And we'd call the broker and we'd offer the screens. And,
with a lot of phones.
A lot of phones, and the brokers were all your best friends. They took you out
to dinner,
and to parties and to bars and etc. I mean, it was whole, it was the whole
package.
You see, my last name is Wolf, right? I'm not the Wolf of Wall Street, but that was the same time period
that Jordan
that Jordan was having all his parties. So we
was growing up in his career.
We did our best, right? So basically, that's the story. And then, okay, how did I get to Brazil? Right?
Yeah, sure.
So we're in now 1994 because of my father working at the Inter-American Development Bank, and also because my mother, God bless her, I hope she's going to be watching this. She's 88.
Oh, I hope she will.
Right, I love you. She's from Ecuador. So I had an interest in Latin America. So, to make a long story short, Cargill, the multinational company, it's the oldest, not the oldest, it's the largest private family company in the United States. Right? So Cargill, for those of you who don't know, they're a big agricultural trading company. In Brazil, they're very strong, soybeans especially.
They're the largest private company in the States.
Yes.
They're larger than Koch Industries.
Yes, and larger than Mars. Mars is the other.
Larger than Mars. Yeah. Wow.
And so they're absolutely a fantastic company. And one of their businesses, and they have many, many businesses, not just agricultural trading. One of their businesses was a financial markets division, right, where we had a group of people specialized in trading the markets as if we were a hedge fund or a treasury, and very active group here in Brazil. And so they said, hey, well, David knows about fixed income in the United States, whatever. Maybe it'll be interesting to put him here with the local Brazilians. Great Brazilian team. Very, very good people that I work with. Fantastic people that I work with. And that was the time where interest rates in dollars were very, very high here. You basically bring money into Brazil.
Like the exchange coupon.
Right, coupon cambial.
Yeah,
right,
the coupon
exactly.
cambial.
So
yeah.
basically, you bring money, you take cash, you go to a bank, sell the dollars, get the reais, buy a NTNB or a LTN, and hedge it on the BMF, and your interest rate would be...
The carry was absurd.
9, 10, 11, 12, 13, 14, 22%, right? Stuff like that.
Yeah.
When you were borrowing, remember, interest rates were higher at the time
Yeah.
in the U.S.
Yeah.
4, 5, 6, 7% in that neighborhood. But obviously you had a huge spread. So at one point, we had $1 billion in Brazil. Literally, I'm not, that sounds like a ridiculous
$1 billion
number.
in Brazil in 1994.
In 1990... It was a little bit later.
Okay,
like
but
97,
it doesn't make a difference
yeah,
at all.
Right, yeah, but basically late 90s. If you say late 90s. And so, and the hard thing was not the asset side, it was the liability side, because you couldn't just bring money in, right? I mean, there was an IOF, there was a tax if you wanted to bring money in as a foreign investor, but because we were an exporter, there were export financing vehicles where you could create a liability against exports, completely legal, absolutely legal, because we were an exporter, and bring money in that way, right? Because
It's cheaper.
You would avoid paying the tax, which I think was 1.5%. I don't remember exactly, or 2% flat, when you brought the money in as a foreign investor. They taxed you.
So it's like a financial engineering that
Yes,
a commodity trading company could do.
Right, and then exactly. And sometimes we would have excess capacity, so we would sell Brazil structured notes to Wall Street. So in other words, we would be able to bring money in, invest it at 13%, right? And Bear Stearns or Salomon Brothers couldn't do it, right? The biggest Wall Street banks. And so we would write a note, right? A structured note where they would buy it from us, and we would give them the return of our investment. So if there was a default, they'd be out, etc. And if the thing got paid, whatever. But it was very interesting. We were a company being a wholesaler to Wall Street. So I don't know if that's clear.
No, yeah, but that's insane that this kind of structure already happened in late 90s. It's for me. I'm not.
I understand what you're saying.
I'm not familiarized with this kind of structure.
Well, I know you had Rodrigo Campos.
Yeah, Rodrigo. It's a very close friend of mine.
He's a wonderful person, very interesting person. I'm sure whoever didn't see it should go back and see his interview.
The first episode.
But Rodrigo was the market maker at J.P. Morgan, and Cargill, we were a client. And he was, and J.P. Morgan in general, they were just so good that we want to buy or sell, 100 million of some NTNB, some 2-year note, which is a long bond at that time. They'd make us a market, we're 1305 with 1310, right? So what you're asking about our sophistication back then, right? The street, right? The sell side treated us as if, even though we were a company, as if we were a big hedge fund.
Sure.
In fact, Cargill, at some point in the early 2000s, decided that their business, this business that I'm in, the financial markets division, global capital markets, it was called, was best for them to be spun off as a hedge fund. And so it became Black River Asset Management.
Okay, but Black River was born inside Cargill.
It was born inside Cargill, and
at
Cargill,
that trading division.
Right, it was the trading division that
spun off as Black River.
Get spun off, and then Cargill kept a huge investment as an investor.
Okay.
Right, as a cotista.
Okay.
Right, in the hedge fund. So they kind of made it legal separation, but the financial interest and the return that we made,
they were the same.
They were the same.
They were the same.
And then just to finish the story, that's the interesting part. Just to finish the story, then in 2006, I went to Unibanco. I was the head treasurer for Unibanco for a couple of years. Then I went to London. I worked at Lentikia Capital. Then Lentikia was bought by BTG. And then to take kind of 12 years, more than that, BTG bought Lentikia in 2008, if I'm not mistaken. And
during the GFC.
Exactly. It was basically when all that stuff was confused and everything was crazy back then.
I'm sorry, guys. GFC stands for Global Financial Great Financial Crisis.
Yeah. So that's the big crisis where liquidity went to zero in the world. And
we had all the Minsk moment and so on and so forth.
Exactly. So that was very traumatic. That was a difficult period for almost everybody.
Yeah.
Lenticchia did a great job. My boss at the time, he called it. I mean, he did all these credit default swaps, and bought protection. So the return of the fund was like 6 or 7% positive that year, which was just terrific. But anyway, to fast forward to 2023, we're in 2008. I did not go back to work in the institutional world of finance. I opened up a small asset manager. Then I spent 5 years in the real economy here in Brazil with a truck rental company.
Truck rental company?
Right. It was actually a food truck rental company. I was the #1 food truck service provider in the country.
You are full of surprises.
Full of surprises. But I tell you, it was a great experience, but it was so hard. I mean, it was really, really hard to deal with.
To be an entrepreneur in Brazil.
Yeah, and especially as an American, especially as a foreigner, right? And maybe I was a little bit naive. Not maybe, I was a little bit naive. But
why did you have this kind of feeling that it's difficult, even more difficult because you are an American?
I think that even though I've been here and I know, I'm a student of Brazil, I needed to actually I hadn't been involved in the real economy. I was living, in the Wall Street, in the Faria Lima,
the world of financial markets.
Financial markets, and and even though I understand that Brazil's tough and the tax burden is high and the politics are all a mess and etc., to actually hire people that are making 1 or 2 minimum salaries, manage them, take care of them, motivate them, to negotiate with your suppliers, to negotiate with your clients. I mean, we had Vigor, we had Nestle, we had Outback, we had Tupperware, we had many, many very big clients. These clients take a little supplier, which we were, right, and they squeeze them to death. It's terrible. That's what happened with Americanas, right?
Okay.
Because they want to pay you in 5 months. So
and they can because they have the bargain power.
Yes, it's cruel. I mean, it's really, really cruel. And I had big fights with these guys because I was the only one that had the product. Not that it was a great business, but I had a fleet of 6 Iveco food trucks, beautiful food trucks that we do all of the artwork of the logo of them. And so unless I knew the customer really well, I would not. I said, no, I'm sorry, but I'm not gonna do it. I'm not gonna take payment in 6 months after I've taken all the risks. I'm giving a piece of equipment. We had insurance.
Sure.
But what happens if it doesn't come back? How's the insurance going? I mean, everybody knows how tough that is. Right? I said, at least I'm going to get my money for the rental. So anyway, the experience of human resources, the difficulty of dealing with the clients, with suppliers that weren't very reliable a lot of the time. And one of our business was rental, the other was food. We actually had a partnership with Nestle where we had a whole operation of working events making the food. And so you think about all of the regulations, the health code.
Oh, it's insane.
Right?
It's insane.
Right. So anyway, I bit off more than I could chew. I have to be honest, sometimes. But anyway, it's a fascinating experience for me. And so I went from Brazilian imports in Washington, D.C., selling gemstones on the street to selling food on the street here in Brazil.
It's a huge change, right?
It was a little bit of a
change. It's a huge move from gemstones in Wall Street to food truck in Brazil.
Exactly.
And nowadays, David, so what do you do? Are you still an institutional investor? Now you are an individual investor?
Basically, I kept my asset management company in the U.S. open. And
can you tell us the name of the?
Sure, it's Wolfcamp Advisors.
Wolfcamp Advisors.
My last name is Wolf, and it's Wolfcamp Advisors, And so in 2019, 2019, the business with the food trucks wasn't looking very good, and then the pandemia hit. So everybody knows what that did to events.
Yeah.
Right? And so, but I had already started going to transition to actually going back to what I was doing at Cargill and then at Lenticia, which is macro trading.
Okay.
Right? And today, it's wonderful because even a private investor has access to a lot of information that wasn't possible back in the
80s or 90s.
Exactly. Right. So some things have gotten much, much better. Right. I was saying, things were a lot easier then. There are a lot of advantages, in those of you who are investing and starting off, right, it really is not such a difficult game as a private investor as it was in the past, right? And you didn't have a clue as a private investor. And so basically, it's got a new life for me also, because investing, trading on your own is very different from when you have a team of really, really intelligent people. You're organized, you have resources, you have an IT department, et cetera, et cetera, et
With
cetera.
that, it is insanely hard.
With that, it's insanely hard. Well, the point is, it's not that I don't want to say that it's harder or less hard. It's different.
Different.
Right? And so in many ways, I've only been doing what I'm doing for 3 years. Right? Even though I have a lot of experience, a lot of knowledge, as anyone would, having worked so long in the markets, building a business where you're doing it on your own, and it really is a business, has been another challenge. It's going. Every year has been better than the last
past one.
Than the past one. But I started right. We had the COVID. I mean, everybody.
The volatility was like.
I mean, you were telling me a little bit about your story and about the story of Dome Investments, which is fantastic. You guys started in February.
In February 2020.
2020. So my hats off to you. That's fantastic.
Thank you. I remember back there was really, really tough. We didn't know anything about the market, about the real economy, about how long would the pandemic would last.
Sure. Well,
so it was uncertainties for. It's like I believe I heard once, like 3 or 4 months ago, from a PM, a portfolio manager in Itaú. It was the first time that I heard the word VUCA. It's the term VUCA. VUCA stands for volatility, uncertainty, the C, I don't remember.
I don't know it, sorry.
And A, it's ambiguity. So this is VUCA. It's VUCA. But the term was created to describe in what the world transformed past the great financial crisis.
Right.
Because all the information they were traveling very fast. The information was democratized. Everybody since then. You could have access to very good trading platforms, high speeds internet connection. So all of this, it's a very good the extent of this infrastructure, but also brings more volatility, more uncertainty, and so on and so forth. The market became more aggressive in a certain way, more spiky.
Yep. No, I understand. That's exactly right.
So it's
what I'm doing now, just to finish out the story, and I want to promote my newsletter. I have decided to invest quite a bit of my time. I like to write. I like to study. I like to organize my thoughts.
Write about
on paper, with charts, etc. And so I'm doing a newsletter for fun. I called it The Wolf of Wall Street.
The Wolf of Wall Street.
Lowercase. Minusculo. And so that's on Substack, and I hope you guys can put the link in there for people to read. And one of the things I think might be helpful is every week I do a...
How can we access your Substack? Is like an internet address, like www.
Yeah, it's a link. Yeah,
it's a link.
Yeah, you just hit the link, and I ask you to subscribe, but it's free.
Okay.
Right? And you just put your email in there. It's not a big deal, and you'll get an email every time I post something.
We will put the link on YouTube, Spotify, and
I appreciate that. And any feedback from whoever's out there. I do write in English, but as Thiago said, it's important to for those of you who are interested in the markets, like it or not, English is the
language of financial
markets. And even on Faria Lima, even for people that don't speak English, 20% of the terms
they are in English.
Right? So in fact, what is the name of?
It's a random walk.
There are 4 English words up here.
Yeah.
Right?
Yeah.
So, and then is there one under there? Oh, yep. See, there you go.
So we can see Uncle Sam everywhere here.
Right, exactly. And so one of the things that I've learned is that the markets are so complex that the amount of information that exists and the amount of information that each one of us absorbs is the amount is just incredible. It's so much you can't even fathom. You can't even understand what it is. And so, how do we, what is the process of organizing all that information, all that? And so I've come up with a way, which is my way. It's not necessarily something that anybody.
The only way.
But I think later you're going to edit and put in the table. But basically, the way I look at it is it's a heat map, right? So basically, it's colors where I put the factors that I think are most important in the market. So for example, monetary policy, Fed. And these are not anything brilliant, okay? Geopolitics, China commodities.
It's very straightforward.
Very straightforward, right? And I put a color, red, blue, or green, for whether the trend is positive or negative, right? For risk assets.
Right. Okay,
so
that's very important to mention.
Right, exactly. So basically thinking, okay, do I want to take a lot of risk or take less risk? Do I want to short risk, right? I love shorting the market, right? So basically you can take a look at this table and you can see, hey, it's pretty red. And last year it was pretty red. This year it's been green and blue. Blue is neutral, but with the red of the Fed there, right? That doesn't change.
So the red, when we see the red color in this in your matrix,
right,
the red color is like the bearish color,
yes,
and the green color is the bullish, and the blue is neutral.
Exactly.
Okay.
And so I have it on the left side. You see the long-term tendency, and then every week I update it on the right side with a little color, with a little rectangle, green, blue. Like last week was.
You can see the delta, the difference between the past week and
exactly,
the actual week.
Right. And so if you go to Wall Street and the hedge funds, the quantitative funds, I mean, they have these just amazing models that are factor models, right, where they're able to correlate economic data, market movement, market momentum, Fed policy, hundreds of factors to come up with their own heat map. So what I'm doing I don't pretend to think that I'm able to predict the market, but why I think it's important and hopefully helpful to our audience,
sure,
is that find a way where you can try to simplify your view, right? Where you can look at something and you can see what you think. And sometimes you don't know what you think until you write it down, right? See what you think, and if you can't make that output easily, you probably shouldn't be taking any risk yet. It's a way of you forcing yourself to organize yourself.
Sure.
Right?
Organize your thoughts.
Right. And so if anybody wants to take the way I've done it, fine. But it's important. But the way I've done it is not what's important. The important is to find some way where you can take all this information, this tsunami of information,
and simplify,
and put it in a couple drops there, that at least, and it's not going to tell you to buy or sell, right? There's no magic here, but at least it'll help you organize your hunt for the right trade, for the right portfolio.
And by doing that, then you can decide more easily.
Right, because the one thing, I mean, I started off as a market maker. And so a market maker is worried about what? A market maker is worried about what happens to the price in the next 10 seconds. Okay, so David bid 100 million 30-year treasuries when I was in Tokyo. Okay, the market's, like I said before, 96.12, 30-second bid, and 96.13. Okay, I'll pay you 96.12. I care about. I want the market to trade at 13. So 1/32 of a point difference, right? So I care about what happens the next 1 minute, the next 5 minutes, because I'm not going to stay with that position. I'm a market maker, right?
You're only there to give price,
right? On the other hand, right, as a macro investor, you are interested in what happens over a longer period of time, and of course, timing is everything. Right? If you're always going into the market and every time you buy, the market goes down 0.5%, right? That's 0.5% is going to add up.
It's going to add up.
Okay? It's going to add up, right? And I'm not saying that you're going to buy it, it's going to go up 0.5% every time, but those are two skills that are complementary, but they're completely different. And so it's been a challenge for me to go from, over my career, to go from the market maker that's worried about the next
minute or 5
seconds,
minutes, few seconds,
literally,
to long-term trends.
To long-term trends, but also being very careful that sometimes the trend doesn't exist. You read it wrong. Sometimes it stops, right? So the time.
Sometimes it reverts.
Right, and so I was thinking about this. Sometimes it reverts, right? I was thinking about this. So well, when you're trading, you should know what your time frame is, and that's good advice, but it's a little bit more subtle, I think, because the point is you don't know what your time frame is going to be.
It's the market time.
It's the market, right? If the market all of a sudden moves to the price where you think that what you bought is expensive, and it happens in 1 second, you're happy, right? If on the other hand, you've said I'm going to stay with this trade for
forever,
2 months, but something happens, right, that changes the fundamentals or your argument, right, or your heat map, then maybe you're out in success. And it's very hard to do that, by the way. It's very easy to say these things, and it's impossible to do them all the time.
But are you like a stubborn trader?
Sometimes. Sometimes. I mean, I'll admit it here publicly. I've been the long end of the U.S. Treasury market, and in fact,
in the long end.
Yeah, right. And so basically, my view was that the landing was coming soon, whether it was soft, hard, whatever.
Okay.
And it hasn't happened, and so basically you've seen, like trading the very long bond,
like the 30-year,
right?
Okay.
Which closed today, I think, at 427. Right. I thought it was a good deal at 390. Okay, and so I've lost money in that position, but I've lost very little because I could see the market was going against me. Right?
Okay.
I said to myself a day or two ago, I said, David, you're married to this position. Why that's what you don't want to do. You have some emotional attachment to this,
yeah.
and not really, because I'm still trading it from the long side, but it's a disaster. I mean, it's not working, right? But my size has gone down every time it goes against me. My size has gone down, and that's negligent. So that's kind of a good lesson, right? Which is you can be really wrong about something, and we can talk about why I'm wrong, the fundamental stuff, and big deal. He did this heat map. It didn't mean anything. It didn't mean anything. But I think that I am happy that the risk management aspect was respected, that I'm totally in the game. I'm not knocked out of the game.
Sure.
Right? I mean,
Rodrigo, he likes to say, when you are trading, you can and you will lose money. The only thing that can't happen, you can't lose the money. You will lose money. You can't lose the money.
Right. So that's basically it. Yeah, and people like Rodrigo, this is a cliche, but you have to survive to become wealthy one day, to be a great trader, to have huge returns. You have to have capital. So the most important thing is having your capital. And I see, I know you want to say, but let me. This is an important point. I hear a lot of stories, and maybe this is controversial. I hear a lot of stories about traders who said, "Well, I lost everything when I started. I learned a big lesson, and I lost everything, and I was able to come back over time." You've heard these stories, right?
Sure.
People say,
like Jesse.
Right. I don't think that those are. I don't
good examples.
Admire people that lost everything and came back. I don't. Right. I mean, God bless them. I think it's great that they came back. I don't want them to. I don't think they deserve not to come back. But you don't want to tell that story because you might not come back. Right?
It's an ugly story.
Right. It's much better to say, hey, I went baby steps, right? And obviously you're going to start having more vol and everything, but you don't want to be in a hole.
No, not at all.
You don't want to be in a hole. So, that's just very, very important. And the market will make a hole.
Make a hole.
In you, and you'll have a hole in your...
in you, in your life, in your family, and so on and so forth. The thing that I want to say, there is a very, very nice book about it. And the person who... The first time that I heard about this book, it was in an interview with André Jakurski.
Mm-hmm.
And the author, if I'm not wrong, it's George Loeb. The name of the book is The Battle for Investment Survival.
Great title.
Yeah. So I remember, because when you were talking about the market, it's a battle and you can die. So you have to fight, you need to live, and you only get those things with risk management. The full history of the book, it's all about that. It's risk management, because it's the battle. You will get hurt, you will lose money, but you can lose the money. You can't be knocked out of the game.
And it's kind of easy, because it should be easy, because when you're in a position that's not going well, you feel it inside.
You feel it. Something tells you.
But at the same time, you don't want to be a trader that says, well, of course you're going to feel uneasy sometimes. I mean, I feel uneasy all of the time, right? But there's certain times where that uneasiness, that malestar, right, you can identify as something that,
the smell is not right. It's not good.
Yeah, it's like, why I shouldn't be.
Why I'm here?
Why it's bothering me? It shouldn't. Nobody likes to have a position that's losing, and that's have a bad day at work. But if it's bothering you, it's echoing in your mind. There's something wrong. So because you don't want to say, because it might be just a human reaction, maybe it's a human weakness that you're overreacting to a price action one day, which is possible. Then kind of what's easier to do is to reduce your position a little bit, right? You don't have to. I said falling in love, being married to a position. You don't have to divorce the person because the person's not behaving
the way you would like to be.
Exactly right. But if you get married, there's certain things that you expect of each other, right? And so sometimes a little bit of a separation is healthy, right? So you don't feel that bad feeling worse, right? And so that's kind of what happened in my long bond story, which is my position is 15% of what it was at the beginning.
15%.
Right? It was kind of a waste of time, right? There's a little bit of emotional connection.
Okay,
so you still have it.
But it's like a quarter that once upon a time the position was. It's a quarter.
No, 15%. It's less. It's like 10%.
It's like okay. It's 15% less.
Yeah, it's almost nothing.
Okay.
So anyway, that's kind of people come and say their worst trade and their best trade, and that's very interesting. This is not neither the best nor the worst, but it's kind of part of life. And it's interesting. I'm a bond trader, right? I tell you, my whole experience as a bond trader, and here I'm getting it wrong. It's maybe this will be the high yield, right? And market will come back down, but the market is not doing anything right in the long end of the treasury market, and you don't need to be a 35-year market specialist to see that. Just look at the chart.
That's awesome. Just to close that subject, nowadays, if you can divide all the assets that you trade, for example, if you do 100 trades, how many of them would be in bonds, in equities, in derivatives, in futures, and so on and so forth?
Sorry. Well, I trade all the asset classes. So I trade equities, commodities, currencies,
options,
and bonds. I trade options. But I'm not a volatility specialist.
Okay.
Right? So I'll do a call spread, a put spread. I'll do something like that.
Mm-hmm.
But I don't trade volatility. I don't have that expertise. In commodities, I like the precious metals quite a bit. I like gold. I trade platinum quite a bit.
Silver
I don't trade for some reason. I could, but I don't.
You just don't look at silver.
I look at it, but I don't really trade it. But gold and the gold miners are very interesting. There are ETFs that are
palladium, something like that.
I do platinum.
Yeah,
platinum is a very idiosyncratic market. It's pretty interesting. Platinum is another thing that's not trading terribly. historically, it's very rare to see platinum be worth half the price for the same weight of gold.
Why is that? It's traded in ounces like gold?
Yeah. So the ratio, the proportion right now is 46 cents is the price of
per ounce of gold.
Of platinum compared to gold, right? So it's very, very cheap. There's something wrong with I haven't been able to identify why it's cheap. I search. So
you have a long view on platinum right now at this price.
It's incredibly cheap and interesting, but it's another market that's not. There's something wrong with it. I don't know what it is. I've been trying to figure it out. There's a disadvantage of being a private investor. I mean, if I was at Goldman Sachs, I'd have some guy that just did studied palladium and platinum. So I have to be careful. And then to keep on the same question, the other assets. So that's commodities. I'll trade. There's some ETFs for agricultural commodities.
Mm-hmm.
There's a great one called DBA.
DBA.
Yeah, it's an ETF which is about 8 or 10 soft commodities.
Okay.
So it's corn, livestock.
I always confuse myself. The soft commodities, they trade in New York or in Chicago.
They trade in Chicago.
They trade. The soft are in Chicago and the grains are in New York.
Right, no, they're all in Chicago.
All in Chicago.
Yeah.
Okay.
So and there's an ETF that if that you can catch trends with. So that was that's a nice place to park money, right? Which there's obviously volatility, but it's a very interesting way if you're not an expert on,
It's like a basket.
It's a basket, right? So you don't need to be an expert on wheat, an expert on on pork bellies, right? It has all these coffee, sugar. I mean, it's very
corn.
difficult, right? So you can trade them as an asset class. So that's an ETF. There are other ETFs that are great, like XLE, which is the oil companies.
XLF financials.
So those are the type of wonderful liquid investments, and I trade offshore. I don't trade the BMF, the
That would be my second question.
The BDRs, right? I like the liquidity that I have offshore, and I trade Brazil also. The other part of this, the answer to your question is I also trade Brazil. I mean, I traded Brazilian
stocks.
More DI in dollar.
More DI in dollar. Right? Okay, more interest rates in
right.
dollar.
And I like to trade EWZ. EWZ offshore. Great ETF. I mean, it's just a wonderful vehicle. Trades 6 o'clock in the morning. You can do a lot of stuff with that.
Mm-hmm.
And then currencies. I've been having fun with the Japanese yen recently.
USD GPY.
Yes. So there's a great macro story there, which is hard to figure out. I mean, it's basically the Bank of Japan is the only central bank that has not significantly tightened monetary policy.
Because that GDP ratio of Japan, it's 250%.
That is definitely one of the reasons, and they are just delighted to finally get some inflation there.
Yeah.
Right? Because remember, going back to the beginning of the interview and the beginning of my story, in 1989, when I got to Tokyo...
was the Japanese bubble, the highest point of Nikkei.
Exactly. 1 week after I arrived, I was the reverse indicator.
You are the best reverse indicator of the Japanese stock market.
39,000. And it's, it's still, what's it, 33,000 today after having rallied at 100% or something.
Yeah.
Recently. So that...
Do you think that's why we don't hear very much about the buy and holders of Japan?
Well, I don't think
there are actually any.
They're all dead. Right?
They're all dead.
Right. No, they're all in the Ministry of Finance. There buys all this stuff. No, but evidently there's been a good macro positive story, which I didn't catch.
Mm-hmm.
But anyway, with regard to the interest rates, it's a pretty fascinating situation where you've had a transition to a new central bank president and a lot of pressure to...
it's Kuroda, right? The president of BOJ?
That was the other guy. That was the one.
The other guy.
I don't remember the new guy. So basically the game there is how long can the Bank of Japan keep rates low? When will inflation go high enough that the market will become bigger than the Bank of Japan? The Bank of Japan has been buying Japanese government bonds, which are the equivalent of U.S. Treasuries, at
To keep in
half a percent, right? So a yield of 50 basis points, 0.5%, right? Our 10-year note is at 4%.
the
right?
10-year of
Right,
there
so-
are at
right.
0.5.
But as soon as you see the Bank of Japan
Buying.
stop buying, right, which is the speculation, well, then you're going to see the yen revalue, right?
Sure.
So the interest rates are being held there. At some point, they're going to go up, probably. Right?
Yeah, they're doing the yield curve control.
Which is the perfect, exactly. That's called the yield curve control. And so, kind of really hot news is like there's a huge bid for U.S. dollars that's developed over the last 2 or 3 days. Even though the Bank of Japan 2 weeks ago decided that they would be more flexible in the price that they pay for the JGBs, right, which is a kind of a monetary tightening. But
It's very soft, right? It's
well, it's more verbal because they're still intervening very close to 0.5%. They're still buying like 60 base. I don't remember exactly, but still, they made the new band to 1%, and it's much closer to 50 than 1. And so the market has decided we're going to challenge them, right? So because they don't want to see their exchange rate devalue too much, right? So basically, very interesting. In the great financial crisis, the yen was 90 or 100, right? Today, it's 140. Okay, when I got to Tokyo 30 years ago, it was also
80.
it was also 140, right? It did a round
so
trip.
it came back.
Yeah, it came back to where it was, and so now you have a huge arbitrage. And forgive me if I'm being a little technical.
No.
But basically, you have dollars. You know, if you have dollars and you're getting paid 4% or 5% overnight, right? And then you have Japanese yen, where you can borrow at 0%. You can make that spread. So you're seeing money go to the dollar, right?
You borrow in Japanese yen terms
and invest in dollar.
and invest in dollar.
Exactly. You're on your way to macro trading.
Absolutely. I like macro.
And so at some point, that trade blows up, right? I mean, that's the whole point of a carry trade. What is the biggest enemy of the carry trade? When there's carry trade, means you carry a position because the asset is yielding more than
you have a
borrowing.
positive asset.
Right, you have a spread.
A spread.
That's why it's called a carry trade, because you're carrying that spread.
It's
So
like a positive asset swap, or
no, I wouldn't.
Not really.
No, you don't need to use that expression. But
Okay.
basically, it's a carry.
It's a
trade.
carry.
And basically, that's what currency trading is, right? I mean, that's all it is, right? Because whenever if you have dollars, or if, let's say you don't have anything, you just go to a bank and you borrow in one currency,
Okay.
and invest in the other, right? So you can leverage yourself.
Sure.
And so currencies, that's something that's very interesting, and maybe it's not obvious. Currencies are basically the same thing as interest rates. I mean, big picture, basically,
And the limit.
right, that the essence of a currency is the interest rate differential. Obviously, there's emotions, there's flows, there's politics, there's regulations that screw everything up,
Sure.
right, which is what happened in Brazil, which was some of the reason that the rates were so high in the past in dollars.
Mm-hmm.
And so anyway, this is all fun. I mean, I think all this stuff is very fun to try to figure out.
It's beautiful.
Yeah. So and then you have your risk management, which is you can get it wrong, and just be careful that you don't get married to the position. And when the position starts working, then you have to increase the position. So basically, if there's one rule, which is total cliche, which is if your position's losing, don't increase it, decrease it. And if you're making money in the position,
Increase it.
maintain it for as long as you can. Don't look at the P&L, right? If the condition for the trade that you identified still exists, stay with it. Do I do that? Almost impossible, okay? It's almost impossible. But that's something you always have to be saying. And if you look...
Eternal mind control.
Right.
Right?
So you should look at your P&L when it's negative. When it's positive, don't look at it.
And when it's negative, you also turn yourself in. When you see your P&L and it's negative or very negative, I don't know where it came from, but suddenly you are very brave. Fala, no, this will turn it to green. Trust me. And then you married with that losing position, and if you don't have a very accurate risk management, the final result it's ugly.
I think there are two types of traders. That have their pros and their cons. There's the trader that is aggressive, and there's a trader that's conservative. And so the trader that's aggressive will do great when he's in a position that he's making money. But he'll do a little bit of what you just said, right? He'll blow up. Not necessarily blow up, but lose more than the other guy would.
Mm-hmm.
Right? So in my case,
the drawdown is bigger.
Yeah, in my case, I'm very careful about the drawdown. I'm very, very careful. So, and I should be more aggressive when I have
the winning.
When I have the good hand. So that just, and everybody's different, right? I mean, I don't think.
Sure, there's not right or wrong.
Well, there is right or wrong, but nobody is.
Nobody is right or wrong.
But I think it's important to know yourself. So when I have a winning position, I should be reminding myself, hey, you have this inclination to take a profit too soon. So fight against your devil.
Good profit is a profit in your pocket,
which is the biggest nonsense.
The biggest nonsense of all time.
And I would say, with all due respect to everybody out there, you all have heard this expression, dinheiro bom é dinheiro no bolso, and it's not true.
Lucro bom é lucro no bolso.
No, it's not true. It's not true. Lucro bom é o lucro que você vai ganhar no futuro. It's the good money. It's the money you're going to make in the future, not the money you've already made. That's the job. To look back is completely normal and human, but the more you can look forward, the more you're going to make and the less chance you're going to have of blowing up.
Excellent. And I think we don't have much time here, but we still have some minutes.
Okay.
When we were talking off cameras, I know there is a subject that you want to talk about. And this talking is even more important because you are a foreigner, so you have a kind of non-biased view of our country, of Brazil, and I would like to know your point of view.
I appreciate the chance to share. And as you said at the beginning, I am a student of Brazil.
Yeah.
But I'm not a Brazilian.
Sure.
I don't I don't think it's possible for an American to be a Brazilian to be an American. We are what we are born into, and we can go and understand the way another culture works. I don't think there's any reason that a foreigner can't understand, a Brazilian can't go to America and understand America really well, but that doesn't change who you are.
So the closest that I could get, it's I could be an America wannabe, but not an American. This is the closest.
Yeah, I mean, I think you can. When you say American wannabe, I mean you can go and live the American life.
Yeah, the American way of life.
Right. I mean, absolutely. Right. And I, in many ways, live the Brazilian life.
Yeah.
But in the way I think, deep down, right, you're not going to change yourself.
No.
Right. And you shouldn't. I mean, that's fine. Whatever. I mean, it's not better. Whatever. And
no.
I think it's wonderful if somebody.
It's a root.
It's a root, right? It's your essence, your soul.
Your soul.
So, so with regard to your question, I appreciate the chance to talk a little bit. I'm just be very direct. We went through, and here I'm not trying to politicize anything and ask anybody to agree with whether candidate 1, candidate 2, but as an American, I'm very proud to be a part of a democracy, and I'm from the state of Virginia, right, which is where Thomas Jefferson came from, and I grew up on. My mom still lives in a house that was part of George Washington's farm. George Washington's
No
farm,
way.
Yeah, it's true. So kind of this, and so it sounds a little bit, flag waving, whatever, right? But the point is, as somebody that does believe very firmly in the importance of democracy, I'm really, really concerned about what's going on here in Brazil. Without getting into PT, Bolsonaro, whatever, the attitude of the Supreme Court with regard to personal liberties is shocking to me. It's extremely unhealthy. At some point, I think the population will not let it happen anymore, right? And in general, Brazilians are docile in many ways, which is a good quality also, that you live a happier life than getting stressed all the time. And that's not a criticism, but I'll just give you an example. Some of the decisions and actions which are not being covered by the international press, it is a complete miscarriage of justice, right? That the world is not being informed of some of the censorship, rejecting the prosecutor from car wash, taking him out of Congress all of a sudden. I mean, these are things that are just absolutely shocking to anybody who's objectively looking at any country. I mean, it's absolutely shocking. And I take some of the few pieces of information I can get, because so little is written about it, and send it to friends of mine that don't know anything about Brazil.
Okay.
Right? Because I don't have
bias.
But of course I have bias. I mean, everybody has bias. But these guys really don't have bias, and they're lawyers, Berkeley Law School. They're like, I can't believe this. Why am I not reading about this in the Washington Post? Right? And so we went through a period with Bolsonaro where the echo across the whole world was that Brazilian democracy was coming to an end.
Was dead.
Right, was dead. Right? And we all know, right, that didn't happen. Right? And so
Sure.
I'm not going to argue with many smart people are convinced people I respect are convinced that we were on the edge. I didn't see any evidence whatsoever of that.
Okay.
And you can elect Bolsonaro. I don't care about that. But the problem with Bolsonaro was not the end of democracy. Right? That was not the problem.
No.
Right? We are in a situation now which is very, very frightening to me. Very, very frightening. And I'm somebody that's married to Ana Maria. And we've been married for 20 years. I made my life here in Brazil, so I care very much about the direction of the country. And win some, lose some. Sometimes your party wins, sometimes your party doesn't win. That's fine. That is democracy.
Sure.
That's great. But we have to be very careful that let the institutions stay within their
boundaries,
their yards. And just to comment a little bit on the United States, and
please.
Here, it's we've already started the presidential campaign. I think it's February that we start the primaries.
The primaries.
The primaries are the elections in each state to decide who's going to be the candidate for the Democrats and who's going to be the candidate for the Republicans.
Just a PS, for us Brazilian, it's still a nightmare to understand the elections in US because of all the process.
Thiago, that is ridiculous what you just said. Your system here is what's impossible to understand. No.
Well, look at you.
No, seriously, it's absolutely crazy, right? I understand what you mean. The electoral college is hard for America. I mean,
because we don't have it here.
No, you don't have it here, but we can do another live and talk about this because it really is fascinating.
We will.
Well, that'd be great. But we're going into the election cycle, and whether you like Trump or not, the fact is he is being has been criminally charged in 2, if not 3 different situations, with a 4th probably coming. And I have no idea what's going to happen, right, with regard to anything. Basically, it is a time of high uncertainty. Trump is leading in the polls, in the
primaries
among the Republicans.
Mm-hmm.
Right now, it doesn't seem like he has any challenger that could take him out. So we have a situation where in a year, we may have a candidate, an ex-president, in a courthouse being judged by a jury of his peers, guilty, for one possibility,
mm-hmm.
of serious crimes, of crimes that bring jail sentences, while he's running for election in November. And from the little that I've been able to study, the fact, if indeed Trump is convicted of a crime, that does not make him ineligible. He is still eligible. There's no ficha limpa in the
States.
U.S., right? It's interesting. The Constitution does not say anything about hey, if you're X,
If you're
Y,
guilty
Z,
of something,
whatever, there are
you're
two
not.
things. You have to be 35 and you have to be born in America. That's all to be president. So we're going to have a situation where constitutional crisis. What's going to happen? Are the two sides going to be? Is there going to be violence? I don't know, right? And I think in the end we'll be okay, right? I don't want to be alarmist.
Okay.
I want to be alarmist. I mean, it's extremely alarming. I do think that we will be okay. I think that the press tends to be more alarmist than necessary, but this is pretty.
But you don't believe in dystopia.
No, but who knows? I mean, like
It's not impossible, but it's unlikely.
Right. I mean, as you know, everything is a probability.
Probability,
right? And the probability of that is way higher than it ought to be.
Okay.
Right. So it's really a crazy situation that we have. I mean, it's really, really. What was the word that you said before? New. That expression, nuka.
VUCA.
It's kind of a VUCA.
It's kind of a VUCA.
Kind of a VUCA on the horizon. So anyway, it's going to be fun to watch all this happen, and certainly one of the reasons that I love Brazil is that I think the politics here are fascinating. I think things are very raw. I think the democracy does work here, even though I have these.
It's a very challenging environment,
Right.
But the democracy,
Right. That was the whole point with Bolsonaro, which is that democracy was fine, even if he wanted to do bad things, right?
It wasn't threatened in any way.
Fine, right? And so I hope that the Supreme Court takes it easy here. I think that would be very good for us who live here in Brazil.
Mm-hmm.
We don't want to be scared of living here. And kind of the last thing, I know we don't have any more time, if I could change one thing in Brazil, right, politically, I would put in the voto distrital.
Okay.
Right? The problem, and this I will die defending, even though I'm American. This is what I believe about Brazil. The
District vote.
The number one problem, the one measure that could be taken that would improve Brazil would be to change the system of how deputados and senadores, representatives and senators, are elected, and make it that we take each state, make districts, right? And so you live in Pinheiros, right? And Pinheiros has 3 congressmen, and you know what they're doing in Brasilia, and if they do a good job, they stay there in Brasilia for the next 30 years. If they do a bad job, you and your friends are going to vote them out.
Okay.
Right? If you have a problem, right, you will go to their office and say, hey, you represent me.
And
right?
I don't agree with.
Right. And so you'll have a congressman that has 200,000 people that voted for him, 400,000. Right? Today.
How can you discuss?
Today you have, how many, what's the population of São Paulo?
The city?
No, the
state, 40.
40. Okay. So basically you have 40 million people and going to each congressman. It's ridiculous. You have to have 400,000 people. That's the whole point.
So here it's 40.
So anyway, and I'm sure that if that until we make this change, we can't solve all the other problems. When people say, "Oh, education is the biggest problem," well, no, it's the biggest symptom. It's not the biggest.
It's not
problem.
a problem.
Right? You can't fix education. There's no way to fix. We already spend tons of money on education, right? The problem is that the policies that our governments put in place, we have no influence over them because we cannot kick the bad guys out of Congress. That's what you got to do. And that's what, in America, that's what we do. And that's really fantastic. I mean, we are able to, you know who your congressman is. You write him a letter, you'll get an answer from him. He needs to he needs to know what you care about.
He
Otherwise,
needs to do
be
the
reelected.
accountability.
He's accountability. 100%, that's the word. So anyway, God bless Brazil. I hope one day we have both of these distrital.
Once more, thank you for being here today. Thank you for talking to us. And, well, without further ado, guys, hope you enjoyed our conversation. And David, you're at home. Every time you want to come back, the door is already open.
Well, thank you very much, and good luck to Dom Investimentos.
Thank
Dom
you.
Investments.
Thank you.
And Thiago, your English is impeccable.
I thought it could be a little bit rusty, but thank you. I was
man.
very
Good
nervous
man.
at the beginning.
No, you did a great job.
Thank you. Bye guys.
Bye-bye.
Thank you.